This, in our part 2 of Gold Outlook 2015, I want to explore a secondary model that I have, which is a bullish model or a bullish scenario. Although I think the probability of this particular model unfolding, we have to realize that the recent declines that we have seen within the market have been largely due to a very, very strong dollar and a equities market that has gone to record highs. Assuming that those continue, I would expect to see continued pressure in gold. However, if we see those markets reverse and turn around, or a major correction even in the equities markets, we could be looking at a different scenario in gold. And the model that I would be looking at is based upon, first of all, gold maintaining and trading above this critical level of 1154, and to me it's more of a zone or an area between, call it 1154 and the most recent lows down at 31, because we're talking about an area of $20, $25 over a period of time that's 5 to 6 years in length. And so anywhere within this level, if it can hold and maintain this particular level, then there can be a case made for the fact that we have, in terms of a major wave up here, meaning our major third, this being our major fourth, and concluding in what we would basically call a flat or a truncated fifth wave, and move back into a bullish scenario. Now, the most important thing is, before we can ascertain that this is the scenario that's unfolding, we have to take out the most recent highs in gold, which are trading roughly at 1255. Now, the other thing for us to really see this type of a model unfolding, we talked about the fact that we would need to absolutely breach the most recent high, and that is this high at 1254. What we have noticed is, of recent, meaning this most recent rally, we've seen a series of higher lows. We've also seen lower highs in the marketplace itself. And when we take that into consideration, we are forming, I believe, some sort of a compression triangle in which we're trading in these defined ranges. If we were to see this bullish model unfold, I think that we would see it come back down. It could go back down and test these most recent lows, as low as maybe even 1160. But I believe it would trade within this range until it hit the apex of this triangle, and then I would look for a break to the upside, because the breakout itself would be a compression triangle or a corrective wave found right after this impulse wave to the upside. So we'd have upside, a corrective compression triangle here, and then a third wave to the upside. That would be the only way I could see this model actually unfolding. As I said, I am leaning towards a model which is looking for lower pricing, but that of course is contingent upon an equities markets which continues to run to the upside, as well as a strong dollar. Given what we've seen over the last couple of years, anything is possible in 2015. But if we see current trends repeat itself, or I should say continue, meaning our strong equities markets and a strong dollar, I absolutely do favor the model which would look for lower pricing. Again, part 2 of our Gold Forecaster Outlook 2015.